Welcome everybody back to Dad's Gone Crypto, the show where two dads break down all things blockchain, NFTs, gaming, and of course the wild world of Web3. I'm Sean.
And I'm Ryan. Today, we've got a fantastic episode lined up for all you gamers out there and even you dads that just like to sit around and maybe earn a little extra cash while playing some games.
That's right. Today we're talking to Paul Mack from BIGA Games, a company that's revolutionizing the way people play and earn money in Web3 gaming world. Forget about just playing for fun. Now you can play for cash. And we're going to learn exactly how it works.
And if you've ever been curious about how you could own a level in a game and earn money from it, this episode is for you.
So without further ado, let's welcome Paul to the show. Paul, how you doing?
Yeah, I'm good, actually. How are you guys doing? 7 a.m. on this side of the fence. How about you guys?
Really good here. It's early, very early afternoon for me. So
yeah, I'm approaching bedtime or 1 o'clock.
we're all over the globe here today. So, Paul, before we dive into BIGA Games, tell us a little bit about yourself, who you are, and how did you end up in the crypto world?
Yeah, that's a long story. How long we got?
As long as you want to take.
Okay. Well, I guess I'm a dad like you guys, so sort of suits the show. I've got 4 kids now. I just had my latest son.
Jeez.
Yeah. My
Nice.
boy Anthony's negative 1 week old. He was born like 7 weeks premature, so
Wow.
he just got out of the hospital recently. So it's nice to have him in the house. How I got into crypto is a pretty long story. Pre-crypto, I had a fund. We used to provide FMCG companies invoice factoring, essentially, so capital that sort of helps them handle the manufacturing, logistics, and supply to larger ticket retailers in Asia. We had to import USD, and we'd have to sort of carry the foreign exchange currency risk. And we'd also have to pay the remittance fees. So sometimes that would just destroy our margins. So we started looking for alternative ways to either hold capital offshore or import it. And that kind of took me down, I guess, the monetary theory rabbit hole. I became sort of deeply ingrained. I was a bit of a gold bug before Bitcoin came along. So this central thesis was really simple for me to adopt going into Bitcoin. And then I was sort of fortunate enough in 2011, one of my buddies, Poker Pro, he heard about Bitcoin on a poker forum and said, hey, check this out. It's like a universal currency. And that was kind of the approach that I got from it. I didn't understand it in 2011. The white paper and all these terms were brand new to me. It was like trying to get my head around quantum theory. It just made no sense. So it wasn't until about 2014 that I got really stuck in. But once it clicked, I sort of saw Bitcoin as this universal currency that mitigates foreign exchange currency risk and obviously the remittance fees. So that was sort of the approach I had to Bitcoin. Now that sort of evolved where I see it as the very best savings and collateral vehicle in the world. I think the world will come to see it for that too. And that's sort of my pathway. I was late on the Ethereum train because I had this one set idea that Bitcoin was the universal native currency of the internet. And I saw Ethereum initially as sort of a threat to the idea or a repeat of the same mistakes where states issue lots of currencies. Like if we wanted a fluent world, we'd all have one single currency to trade one language, right? It would all be very easy, but we sort of complicate it by having these little barriers and creating different currencies and having different languages. So I saw Ethereum as a threat to that idea, and I didn't really understand smart contracts at the time. Once I wrapped my head around smart contracts, then I've just been all in sort of on DeFi, and I've been building and experimenting in DeFi for sort of the last 6 years. And that was sort of my segue into gaming, which I can get into later because that'll extend the story. So that's sort of it. Since 2015, we converted our finance company into a seed investment fund. We were originally investing in companies that we were supplying because we sort of had a look at the order books so we could see how profitable these companies were and sort of what advantages they had with a bit of extra capital. So we started investing in them at that stage, and that kind of gave us that seed approach. We started investing across different verticals. Then when crypto ICO season came along, we saw that as a big opportunity for us to pour a percentage of our portfolio into investing in these sort of projects. And since then, we've been advising and finding capital for early stage projects in crypto space, and probably back to over 120 projects since then.
Wow.
Yeah, that's our story in crypto.
Wow, excellent.
So, Paul, out of all the genres that you could have possibly chosen, AI and NFTs, you chose gaming. So was that a eureka moment? Because I can't think. I love games, all right. I love playing them, but I can't see myself building in it because it's too hectic. It takes a special type of person. So why did you go into gaming?
Yeah, to be honest, I wouldn't advise anyone to build in gaming. I have this thesis that gaming, particularly Web3 gaming, has a much higher failure rate than pretty much any other segment, namely because hit games are just like business, right? It's a 95% failure rate just to reach profitability for any normal game. But now you got to get not only the game mechanics right, you got to get a game that's a hit, but you also have to integrate tokens and get the token economy right as well. So you have the burden of nailing both a good game as well as nailing a successful token economy. And they both have high degrees of failure, right? So I think that's something that I definitely get away from for most people. How I got into it though is sort of a convergence of a couple of different stories. One, I've got two boys. They never really gave a shit about dad, the venture capitalist, but they love games and sort of
Dad the gamer.
Dad who owns a game studio is like Superman,
so much cooler.
yeah. They tell all their friends, my dad owns a game company.
Street cred, that's all what it's about.
Yeah, exactly. It's kind of all to look like a god in your son's eyes, Once you're a dad, whatever it takes.
While also we're trying to get that YouTube plaque on the wall.
That's right.
Kids will forever love me.
Yeah, exactly. So that was one side of the coin. The other side was it was my frustrations with DeFi, to be honest. So I'm fortunate to have a pretty large TradFi network. When we were providing finance to all these companies back in the FMCG markets, we essentially started taking on external capital through peers, and that grew out to family, and it just grew out where we started taking their money and reinvesting on their behalf. So we grew kind of a large book. And I always thought that once they got DeFi, they'd go all in and they'd love it. But the more DeFi has matured over the years, the less engaged these same people have become. And now it's kind of like, I kind of came to the realization that they're all sort of in their twilight years or their twilight phase of their careers. And the idea of learning some complex, nuanced, new digital structure around something that they had built a career around that was completely different is a long stretch for them to be onboarded to our systems. And when I sort of see my kids and the way they interact, my son played Subway Surfers on Android, and he kept asking me for money. And I sort of found out 3 months later, I was getting all these charges out of Ireland, I think it was, and I didn't know what they were. So I thought I'd hit up the bank, and then I found out it was something to do with a game, straight to my son. And he's like, oh yeah, sorry, I've been using it to buy credits in games. So I was like, I was a little bit pissed off at first because he clocked up like a couple of grand over a month. I was like, Jesus Christ. So then I realized, wow, my son's doing this and he's clocked up $2,000. He's one of 3 billion gamers out there. I should really start taking notice of this. But two, that same son, he went online, found some script for hacking Subway Surfers, and ended up hacking about $1 million in USD value worth of the Subway Surfer credits. So he found some infinite, so I was really shocked, and he was only 11 at the time. So I kind of realized then and there that the next DeFi users are our kids, right? They're going to be our super users because they're already interacting with games and online digital currencies in the same way, relatively similar to the structures we're building. Mm-hmm. They're never going to carry paper. You know what I mean? It's all just going to be click and go. So that's sort of where my attention focused. And I've found myself very frustrated with DeFi's sort of maturation, where it gets to a point of sort of tall poppy syndrome, where the market's matured to a certain degree of adoption, but now it's just liquidity providers shifting between the better yield offerings, right? Instead of really growing and expanding. And so when I look at, where our real big mass adoption users coming from, I started shifting my attention to my kids or slightly older, Gen Z, millennials, and then gamers, because gamers obviously mirror the same online habits. So that's kind of the transition, how I got into Web3 gaming. So I started looking at, and then there's one more convergence. I've been working and experimenting in DeFi, building structures that are sustainable. Like I'm very dedicated to the space because I'm one of the idiots that actually believes all this is going to take over the world, and cryptocurrency and blockchain will be the underlying foundation of the entire global economy.
That's true. Yeah.
Same here.
Yeah, I really do. So I've been dedicated to product market fit and the central thesis that we've got this stupid inflationary system and it's all based on artificial yield. So I've been designing, experimenting with different models. Like I've literally spent millions of dollars wasted that's never going to go anywhere, building and testing different structures. And I came up with this concept that I realized worked really well if we had some kind of revenue system. And that's kind of the framework that led me to build BIGA. It was kind of a eureka moment in that regard. So it's a convergence of all that. So it has a really long story, but there's a lot of things that sort of shifted me into this direction. Hope that makes sense.
That makes a whole lot of sense. And, as you mentioned there, you were talking about the fact that Web3 gaming is tough. There's a whole lot of hype. People get in it and then people lose money. The tokens deflate. Eventually the game dies. Can you tell us what problem BIGA Games is solving in the space that kind of makes you different from that and can give you some longevity in the space?
Yeah, absolutely. So I think the idea of play-to-earn gaming is magnitudes larger as far as potential revenue and turnover than people give credit for. So there's this huge opportunity. If you look at Axie Infinity's sort of velocity of success, it's one of the fastest 0 to 1 billion in crypto. And what's interesting is that there's a very common sense underlying viable system there. The problem is they had a few, I guess, chinks in their economic architecture. And if you look at them and you look at every other Web3 game, the concept of play to earn is very simple, right? Playing games is fun. Everyone loves it. There's a huge audience, 3 billion. Technically speaking, it's the largest single consumer demographic in the world, right? So there's this pool of money. If you look at that demographic, there's I think it's about 70 something million gamers are actively engaged in some kind of activity trying to monetize gaming, whether it's through streaming or tournaments or anything like that. There's about 70 million people. That's a huge unmet demographic, right? That's unfulfilled demographic. So the potential is really simple, right? Have fun playing games and earn money. That's just a very simple formula for a really awesome product. The problem is the underlying economic structures are wrong. And the way every game's been approaching it is wrong. And if you try to boil it all down, the way I sort of encapsulate it is that it comes down to this idea I called the Incentive Trilemma. And it's basically an incompatible implementation of inflation yield and liquidity in the underlying economic architecture of your incentive system. Because it's all incentives, right? How to bring people into your game, how to keep them in the game, basically, and how to stimulate revenues from them or accrue value from this audience. And the general sort of default system that every Web3 game is applying is this idea that we're going to reward you with tokens for playing. That's like handing out participation trophies for doing nothing. It really yields no results. Right. But the main issue is that you're stimulating a yield, or you're offering the concept of earn from an artificial currency that has no underlying value. Mm-hmm. This is where sort of the problems begin, right? Like if I just inflate something up front, I have to deal with that later. And if there's no underlying value to that, then there's nothing to stop it from capitulating on itself. And that's the main problem. So,
all right. So, Paul, the incentive trilemma, you mentioned tokens lose value due to inflation. It inflates, it crashes down like 99% of most tokens in crypto, and you're left holding a bag of nothing, a bag of shit, shit coins. Exactly. Right. So, how does your model, and speaking only of the model, how does it? How do you do things different that changes that basically a trilemma?
Essentially, the main problem is you front load your tokens, right? That creates sell pressure because you've got all these tokens out there that create sell pressure. That sell pressure just wipes out your liquidity eventually, because the only way Web3 games, if they don't have an underlying revenue system that generates fees, there's nothing to support that sell pressure, right? So that sell pressure goes straight after your liquidity. Once the liquidity dries up, there's nothing to sell into anymore. So that sort of comes back on itself, where the rewards mechanism, the token that you're handing out, has lost all value whatsoever, and there's nothing convertible now. So that means the entire reward system's gone, and there's now no longer any incentive to play your game. That's why the whole thing falls apart. So if we bring that down further, okay, what's the root problem there? It's revenues, right? Underlying revenues. So we started from scratch, building from a revenue system up, because if you look at crypto tokens, they're all really just business models, right? And the token applied to it is really just a way to capture that value and redistribute that value to token holders in a distributed audience. So if you look at it that way, it's really simple. You focus on revenues. So what we've done is designed a revenue model, and it's brand new. No one's ever done it before. We've essentially turned levels and games into assets you can own. But what's important is how we've applied that model. So any game in the BIGA Arcade, you pay to play, you spend $1, for instance. Okay. If you lose that game, you lose that $1. But if you win, then the smart contracts automatically acknowledge your wallet as a brand new level owner. You now own that level. Everyone who comes to play that level now pays you instead of paying the arcade. So what we've done is turned every single level into a brand new income stream. It's never been done before. Every level has its own liquidity pool that essentially is just accumulating USDT. And that's the other part that's really important, is that you're earning USDT. So we make sure that all the value that's coming in is a real convertible input. So it's all USDT. No inflationary token needed. We don't need to stimulate any rewards up front with the issuance of new tokens, because the real reward that you're fighting for is that level, and that level captures the USDT. So that's just the real key point I want to hit home, is that we've completely changed the incentive. Every other Web3 game is play and get this token. With us, it's play and get this level and earn all this USDT. Simple.
That's absolutely brilliant. I mean, you've created a sustainable player-focused economy within the game, rather than, as you said, just an inflating deflationary token, basically. So that's
exactly. That's the whole point. Is like the issuance of tokens and the selling of tokens are the two core problems, right? That's pretty much the objective of most other. It's not just Web3 games too. It's most crypto projects. Their whole model is sort of issue tokens and sell them. That's how we generate revenue, and that's how everyone exits. That's not a model. That's
right.
Basically a scam.
Right. Right. Sure sounds like one.
Exactly. So it's just changing that. It's okay, come play this, earn a bunch of USDT.
Right. Wow.
So
that's crazy.
We now on your beta site, is that right? And it's not live as yet, and these are some of the games. So I've got a couple of questions. Let's go to one of my favorites. You got me addicted, and I think I hate you for that. I'm like just sitting there at a coffee shop. I'm just quickly going to do some work, and I started playing. And I'm like, I'm playing a game in a coffee shop, and people are looking at me. I'm like, but it's for cryptos. In my mind, it's like, but it's for money. That's like, so it's fine. And they don't know what I'm doing.
Yeah, I'm being productive, right?
I'm being productive. Yeah, exactly. All right, we at one of my favorite games. It got me playing until I had to eventually just leave the coffee shop. So tell me, so now we're busy playing a game and you're talking about levels, right? Let's say I make it to level 10 of 200 levels, right? So does it mean that I own level 10, or what happens if I make it to level 11? How do I own that? Or how do I own level 2, and how does monetized? So can you explain that to us, just so we understand?
Yeah, absolutely. So the way it works is you essentially want the best score of every level. As many levels as you can. So if you get the best score on level 10, for instance, then you now own that level. So you had to pay $1 to play it, right? Now, if you didn't get the high score, you would have lost that $1. But because you got the high score, you now own that level. Now, everyone else who plays you and doesn't beat your score, you keep that money in perpetuity. So that's how it works. And this level, once owned, will continue earning money night and day while you sleep. So it's like a brand new passive income. Every single level you own operates in the same fashion. So the more levels you own, the more income streams you have, essentially. So imagine if you own 20, 30 levels, you've got 20 or 30 income streams just tapping you of USDT every single day.
Wow.
Now, do I have to buy dollars, or do I buy your native token? And then how does the dollar work into that?
Okay, this is where we get into the nuance, and honestly, this is something I'm very, very proud of. So I'm really proud that we've innovated on the product level, right? This level ownership structure has never been done before, not just in Web3 gaming, but gaming period. It's never been done before. So we've essentially turned gaming into poker, where instead of playing like Texas Hold'em or Omaha, you just compete against millions of players every day on different games with different skill sets. So we're very proud of that, but I think I'm more proud of our token design, to be honest. Token design is what is really important here, because in Web3 gaming, you can have a good game, but if because you're not paying forward to stakeholders, right? If the token implementation isn't done right, it's not capturing value, your token really has no value. And unfortunately, with the gaming, it's not just about your users. Most people will judge the validity or success of your project based on how well the token's doing, right? So you have to somehow, and not just get a good game, but you have to build and integrate a token that somehow captures that value and supports a strong token economy. The other thing is that you have sort of a responsibility of longevity. And this is something that I think not many people in Web3 gaming talk about, but it needs to sort of come to front and center. With normal games, they have a normal life cycle, right? Sort of a season, and then most people get past the game. There's the initial hype, people love it. I mean, outside the top 0.01% of successful games that sort of last 5-10 years, most games are seasonal. So there isn't the expectation of longevity. But when you've got people investing in the token, especially if they have long-term time horizons, there's an expectation of longevity. This product needs to last long, continue accruing value for me as a token holder, right? So this is where the token implementation becomes really important. So what we've designed is a decentralized cashier. Okay, so this means it's non-custodial. Obviously, it's great, and it sort of enables us to bypass the SEC and all these issues that you have with being custodians. But more importantly, the way this decentralized cashier works is you have to deposit USDT. It works similar to a Uniswap liquidity pool. You deposit USDT, so let's say you deposit $100 of USDT, you get issued $100 worth of BIGA tokens. Now, you can take those BIGA tokens, and now you go play all the games you want. Now, let's say you win $10,000 worth, right? When you go to cash out, the cashier burns the BIGA tokens for you and then sends the USDT to you. So you've made all this USDT, and here's a few very important functions. So what have we done there? We've just locked all the liquidity, which means our game economy is 100% backed. This is one of the issues that I mentioned in the Incentive Trilemma. Most projects don't have full liquidity, as in even if you earn these tokens, when you go to sell them, they're worthless because the books don't support your sell pressure. With us, every single dollar in BIGA Arcade is backed by $1 of USDT sitting in that cashier. So you can cash in, cash out full freight no matter what. That gives gamers confidence to come and play our games knowing they can cash out anytime. Second very important function, this decentralized cashier fixes the price of every BIGA token to 10 cents USDT. Okay, this is really important, and it has some really cool symptoms. So another issue that most Web3 games struggle with is game economy instability. So if you look at Axie Infinity, for instance, at the start of 2019, it cost you about $20 to buy into the game, to buy one of their Axies, right, and play. By the end of the bull market, it cost you about $2,000. Yeah. So imagine that from a gamer's perspective, right? It's just impossible, especially when 90% of your audience is based out of Southeast Asia. You're asking them to shell out like 1 to 2 months income just to play your game. It's never going to work. And the inverse relationship, when the market tanks, what happens, right? The assets plummet. So the cost of your game's gone down, but so has the total revenue coming into your game and the value of those rewards. So you can't have this volatility if you want a product that's going to retain lots of customers. So we've fixed the price via this decentralized cashier at 10 cents. So not only have we now solved the liquidity issue of Web3 games, we've now also solved game economy instability. So our game, the integrity of our game, our core product that generates all our revenue is protected. Bull or bear, it's always going to function no matter what. It's always going to have full liquidity, and it's always going to be valued at the same. It's cost the same. But here's the secondary symptom, which is fucking awesome. It's buying. So if you think about the cashier, it is now a reseller of BIGA tokens. It needs to stock up inventory of BIGA tokens to resell to gamers.
Okay.
right? Because gamers need
Right.
that as the currency to play in the arcade. So that's its core function. Now, because it's burning those bigger tokens every time a gamer withdraws, essentially every token that goes into the BIGA Arcade is burnt and gone forever. So it constantly has to replenish its inventory. Now, where does it get its inventory? It buys it off the secondary market directly off Uniswap LPs.
Okay.
So this is really awesome because it means we have a perpetual burn directly related to the success of the platform. So the more players who play the game and the higher the frequency of plays, like the more players that play and how often they play, the more bigger tokens are burned. The more games we deploy in the ecosystem, the more bigger tokens are burned, and they start getting burnt at a faster and faster rate as our system grows. So that's how we've scaled. That's how our token model is infinitely scalable. The more users that come in, the more bigger tokens are burned. Whereas if you look at other projects, right, the more users that come in, the more rewards are inflated, the more tokens are, the more supply. That creates that liquidity issue, right? So we've solved all these issues, but here's another thing. What does that mean? Okay, our token, bigger token on TGE, drops at a $50 million FDV, which means at 50 billion total tokens, each token is worth 0.0003 cents.
Okay.
Right. But the arcade, the cashier, buys them up to 10 cents. It is inevitable. It's going to happen. That means our token is mathematically programmed to go up 333x.
I got to get some bigger tokens.
It is algorithmically programmed. It is a mathematical certainty. It has to go from 0.0003 to 10 cents eventually. The market will reach equilibrium with the arcade demand, right? The only question is, how long does that take?
Mm-hmm.
That's the fun of what we've built. And as far as I know, it's the first token that's ever been designed this way. So that makes it hyper deflationary, and it also gives it a minimum price target. And when I say minimum, that has to happen, 333x. And that's a minimum. After that, it goes into a new evolution, which I can get into later.
Wow.
That's absolutely incredible. So, I mean, you've designed a token model that has no choice but to go up as long as people use the game. Essentially,
exactly.
I mean, essentially, you need players, and as long as you've got players, you've got a product that you're selling, and it just makes sense that that product becomes more and more valuable as more and more people play it.
Exactly, it has to. So the other way to look at it, right, is that there's a market value of 10 cents, and we're selling them at a 333x discount to market, right?
That's crazy.
Yeah, I think it's really fun, and if you think about how tokens operate, just on really superficial narratives, they do very well, because now you get into the speculation of how it works, and then we look at all the other supply demand levers. So if we want to look at, I mean, most people, I know lots of people in it for the tech and love games too, but people buying tokens are generally in it for the appreciation and speculation. So let's get into that quickly. So if it's a guaranteed 333x, right, you definitely want to be holding it, but what you really care about, okay, is how long does this take, right? And the duration of this is impacted by a few levers. So one is obviously straight out arcade demand. The more players, the faster it happens, right? Because the more tokens are burned. The higher the frequency of those players playing, the more tokens are burned, right? Okay, so that's the first lever, is just general arcade demand. The second lever is how many games we deploy. Every new game we drop is like 100 new levels, right? Each level takes on tokens. Now, you see probably 8 or 10 games on our current beta. We've actually already built 30. We'll have hundreds over the next 12 months to deploy. So every new game is like a brand new token burn. And so each of these start accelerating the rate of that 333x journey, right? Because more and more tokens burn, less supply to buy from, higher the price has to go. Okay, the third is how many people just want to buy and hold, right? Just long-term investors that want to enjoy that 333x ride. They take tokens out of circulating supply, which means less tokens for the cashier to buy, which means it marks the price higher and higher, faster and faster. The fourth is price agnostic traders, people that don't care about holding. They just want to trade off the volatility as it goes on that 333x journey. they obviously take tokens out and have to hold them in their wallets to be able to trade. And now we're talking about how much is stored on as far as liquidity is concerned in trading environments like centralized exchanges, decentralized exchanges. Again, taking tokens out of that available buying supply. And fifth is our staking platform. So we've built a staking platform that generates a real yield. So like I said earlier, it's important that people understand that tokens operate are really just manifestations of a business model. They need an underlying revenue. They need a profit margin. Without that, their whole objective is to sell tokens just to survive as a business, right? So you need a revenue that generates profit, then your business is sustainable. Simple. Now, without profits, we split the revenue with all level owners. And after that, we make about a 24% net profit. So, and because we've built our first 100, we essentially make closer to 45% net profit until we're taking on other games and having to build more. So to begin with, we've got a staking platform that we redistribute those profits into a yield-bearing signature. So you can deposit your BIGA tokens and you generate a real yield, as in paid out in USDT. And depending on the term, it's going to be between 10 to 40%. So if you lock them for a long period, you get a higher yield and it's paid out monthly to your account USDT. So that again is going to drive more BIGA tokens out of the system and into the staking platform. So for holders, it's a greater incentive to generate more holders, long-term holders that share the vision to, one, ride that 333x, but also generate a yield in USDT. So I think that's a very strong component. So yeah, those are all the levers that, if you imagine all that power working together, that's going to stimulate velocity, right? It'll go faster and faster. So theoretically speaking, it should sort of be like a nice S-curve where initially it starts off slow and then it just starts accelerating that 333x journey. That's the way I've designed the token. And this is the fun of crypto. What more people should be doing is like taking these kind of risks and experimenting. And we've done all the modeling. So we're going to publish a UI where you can play around with those different levers to see how fast it changes the outcome. And all the models so far, nothing's broken. Every single model, every single assumption we've had looks like it all works perfectly. So I expect this to happen. It's really just a matter of how fast. I think maybe 8 to 14 months by the looks of most of the models. So that's really exciting. That's really exciting. I know people hate when founders or teams talk about price appreciation, but this is literally built in. So it's only logical that I talk about it for you to understand the way the token mechanics work, right?
Yeah, absolutely. I mean, you're completely redesigning the way tokens work, at least the way I've ever heard of a token working.
From a proper financial background.
That's definitely worth getting out here in front of people. That's pretty crazy. So you're saying you have a UI that that people will actually be able to test this model on? Is that published or you?
No, it's not published yet. We haven't done the designs for it. We've just been working on the Excel formulas. So that's all done. We've tested them all. They all work fine now. It's just building the UI. We'll have it probably live just after TGE, but essentially it allows you to change the rate and the percentage rate of velocity for each of those different levers. So how many people stake versus how many people are buying versus how much arcade users there are, and what that does to the price, how fast it goes.
You're going to publish that on your staking platform, or?
Yeah, we'll publish it on the staking platform or just on the website, staking platform website as well. So yeah.
Oh, very, very cool.
Paul,
yeah, I think so.
Are these all your games, or are you looking for third parties? Let's say someone's created the next Angry Birds, right?
Okay.
And they say, hey, Paul, I got a game. I got a game that we can make a movie out of. Can you list it? How does it work?
Okay, so we've built all our games in-house, so it was vital that we did that because this whole incentive mechanic is brand new, right? Hasn't been tested. So we wanted to come to market with a sort of quick pill approach. So we started as a minigame arcade so we could try different game mechanics with this different incentive mechanics. So our incentive mechanic, the way it works, the level ownership model, there's derivatives of that work in different ways relative to the game mechanics. So we had to build all that out first, test it, make sure, figure out what works, what doesn't work, what can be gamed, what can't be gamed. So we kind of we've built a ton of games and then bin them because they wouldn't work with the system. So theoretically speaking, now with the underlying incentives we've got, it should work with most games now. So we've scaled up already. So we've got, first person shooters. We've got an MMO under production with a couple of partners, and it's all tied into the same model. But our growth model, we've built everything in-house. We've got our own in-house development team. Our lead engineer, Tim, he's total savant. He's basically on the spectrum when it comes to developing games. And he's just fantastic at it. I used to stand in his way and be like, hey, we should design this game. This will be really cool and fun. And he'd build it and it'd just be terrible. And he'd be like, just listen to me. And he'd build something and then we'd deploy it for our community and they just jump all over it. So it's funny to go through that process to see what experienced game developers can do versus, someone who's just like, hey, we should slap this cool idea onto this game. It'll be awesome. Yeah, it doesn't work that way. So he nailed that and he's just brilliant. So we built all that in-house, but we are going to operate. So our scaling plan, our growth model is to operate similar to Steam or like an app store, right? We want all third parties to deploy their games onto our system.
Sure.
And in doing so, again, this all creates new burns. So when I talk about the issues that Web3 games are facing, I'm not talking about it like you guys are all pieces of shit, you failed, you suck. I'm talking about it as these are clearly identifiable problems. If you look at all the token launches recently, all the biggest hypes, it's like the entire market's going through this phase. Once this project drops their token, Web3 game's gonna take off. We've done that like 6-7 times now over this last six-month season, and they've all flopped, right? And they're all flopping because of the same issue. It's the underlying economics. It doesn't work. And the token is integrated superficially, and it's superficially attached to something that doesn't work. So I'm pointing out because we've got a solution here. You can plug into our system, and then your Web3 game, even if it was failing before, it's now going to turn revenue positive. So That's a solution for the whole Web3 gaming space, but also for any developer. So our first to market, the way we sort of originally came to market is we started hosting minigame developer competitions because we wanted to tap into the game developer community because we figure they're the biggest critics. And if anyone's going to shit on our idea, it's going to be them. And it was a really good response. Our first competition, we had 400 developers join in, about 160 games were committed. And yeah, we've run a few of them since, and so far they loved it. And most of the games that were built, we could apply to our system. So yeah, technically our growth model, we're going to grow like Steam, essentially, where we just want thousands of games. We want to be that one destination where millions of people around the world all log in, compete over any game they want to earn USDT.
It sounds amazing, and that is a long-term vision there, I'm assuming, right? I mean, that vision is extending years and years.
Yeah, absolutely, for sure. I mean, it depends on how fast this growth model goes. So we've got the central thesis that sort of drives everything we do, and that's our mission is to essentially make as many gamers as much money as possible. That's a really simple objective because the way we've designed our system is that it's a total alignment between us, the provider, and them, the creator, right, or the player. The more gamers who make more money, the more they're going to play, the more they're going to bring people into play. The more gamers who get rich, the more people are going to hear about it and play in our system, the more fees we generate. It's really simple, aligned structure, and that's our whole objective. So if we do start hitting, if you look at our testnet, if you can see behind me on the scoreboard, Roger Up, he got to like 300-400K in a couple of months. And the way our testnet is running is all those financials you see, those are real. Those are reflective of real gameplay. So the only difference is people aren't depositing their own money. So when you sign up, you set up an account, we just give you $1,000 in USDT. Sometimes we hand out some more. But what you do with that USDT or what you do with those bigger credits is how well you perform, right? And financially, as you can see, these people have made really good money. And that was with a really limited pool set. If you look at our actual DAU, it's more around 100. It fluctuates between 100 and 140. So a very small percentage. Most of our unique players came from specific tournaments and community outreaches that we did specific programs. But the point is that all the models show that you can make millions of dollars this way once we scale. So the more people who make millions, the faster we're going to explode because more and more people are going to see these people making millions playing these games. So yeah.
Right.
Paul, just on the two things that you mentioned earlier. All right, so let's say you got the token side and you got your USDT side, which you get paid out in. So if you got a total supply of 10 billion, right? Let's say one BIGA equals one game. That means my capacity is what? 10 billion games. Is that right? So what happens if that 10 billion tokens or 10 billion games are used up? Because obviously it gets burnt, right? So does it go beyond 10 cents?
Okay, this is really fun. This is where I had lots of fun. This is what I really like, the sort of alchemy of crypto and DeFi. Okay, so no matter what, the token has to reach 10 cents eventually. There's 50 billion. So that means it needs to hit a $5 billion market cap eventually. Once it reaches that, it means the secondary market price, the price of BIGA tokens selling on all other markets is equal to Arcade demand, right? So it's 10 cents. That means that either there's a few stubborn holders who aren't selling, which might be forcing the price higher, or it's going to fluctuate back and forth, or there's no more tokens left. Okay, so the way it's working from that point on is that the BIGA Arcade, we still have our profit margin, right? So people will still play. It's going to issue BIGA coins on demand, but if there's only a few token holders remaining, let's say there's 1,000 token holders remaining and they're just stubborn, they love BIGA so much they're not going to sell, they now split all the revenues that the arcade earns. So all the USDT, all the profits go directly to them from then on out.
Wow. So this is the gamification is just never ending.
So now think about the game theory of that. Okay, supply shrinking, it's getting burnt up. How valuable are these tokens going to be? If it reaches 5 billion, how much revenue is this system making? And if there's only like 100 of us left, we're going to be collecting all that revenue. That creates that. What that creates is an automatic DAO. Without us implementing anything, these guys now have a financial incentive to coordinate and organize to make sure the system goes absolutely ballistic, because they're just benefactors forever in perpetuity.
But don't you need bigger tokens to play the game? So if there's no more bigger tokens,
exactly,
how
that's
do you play?
What I was saying is the cashier starts minting on demand exclusively. So it only mints to facilitate those gamers. There's no more entering the secondary market, right? It stays isolated in the cashier. It gets issued once you deposit your USDT. It gets burnt on the way out. That's it. It stays there.
Okay, so the external supply isn't changing. The external supply is what is left with any holders that still have it.
Exactly.
Gotcha. So and then at that point, the token's still 10 cents as far as the game is concerned. And players now you said they get 100% of the revenue, but are players still earning? Or are you talking about the company's revenue?
Yeah, exactly. So the platform still will operate depending on how many games it's got itself, or having to build more games, right? It's operating off about 24 to 26% net profit. That 26% goes directly to those remaining holders outside the system.
Gotcha. So anybody that was loyal enough and willing enough to hang on to those tokens for the duration are now getting
like cash flow rich for the rest of their life. Yeah.
Wow. That's definitely never seen anything like this one. So
Ryan, do you have 10 billion friends? They can just play one game.
Unfortunately, I don't think I have 10 billion friends.
I'm glad you guys get it.
Jeez,
yeah, dude,
this is fucking mind blowing, because we listen to a lot of projects and stuff like that, but how it goes back and forth, and it's like, to be honest, going into it, not understanding the token model and not understanding, it's like, it's going to be another game, it's going to be a dump, and then it's going to go, it's not going to go to Valhalla, it's going to go to hell, and there's no one's going to play these games anymore. But just the way it's operating, it's like, it becomes addictive. Like, I just want to play just one more. So I ended up playing 5 or 6, and then I switched games, so I didn't like that. And that's already 15 games that I've played, 15 times I've played in a short space. And then now, like a couple of days later, I'm like, okay, I've got this itch to beat my score. And because I didn't get any points, I want to level. Like, I'm also very competitive by nature. So it's like, shit. So it's very flippin' cool.
Awesome, man. I really appreciate hearing that. You never know, because, we do surveys and we hear from our community, but if you look at, this is one of my major frustrations, is that we've worked with every user acquisition platform. We've partnered with so many other projects, and it's all sort of it's all sort of an endeavor to capture a portion of their community, bring them on, introduce them to the product, and hopefully they play and stay, and your retention goes up and up and up over time. But it's just the amount of bots and the amount of just extractors. It's like a 95 to 98% minimum demographic of extractors that don't really uninterested in it. They just want to claim whatever rewards there are and just gap it. So it's hard for you using Web3 facilities to really get a gauge on what your true retention is going to be. Then you look at the people that do stay, and then you sort of model everything off them. But because the number is relatively small, like 100 to 140 DAU, those are real users. I mean, it's small. It's not great for a data set, but relatively speaking, compared to most other Web3 games, it puts us in like the top 20, which is crazy. Wow. Yeah, because the real DAU numbers are terrible for most projects.
Right.
So it's really nice to hear that, I guess, is my point. Because, yeah, I mean, I play it and I love, like, I can't stop playing Baby Dash, to be honest. Yeah, I don't know why that game hooks me. Watermelon seems to be the favorite by far, though. But it makes sense because it's kind of designed like a slot machine, you know, so it has those same unique things, but it's just dropping and you want to line them up, sort of thing.
Yeah.
Yeah.
Very, very cool. It sounds like we're going to have some Dad's Gone crypto tournaments going on over there.
Yeah.
So.
Yeah, it's funny actually.
Idea,
There's
right?
So when we were originally doing our DD on potential total addressable market, we look at all competitors, right? And there's there's these real abstract communities. There's working mums Facebook groups where they look at just alternative revenue streams they can do while they're at home looking after their kids when they have idle time. And there's one where they play like solitaire earn, where you earn money playing solitaire and stuff. It's really small, but there's like thousands of them. So I'm really interested to see who jumps onto this model and starts playing. And this is another thing that's really important. Okay, a single game. I have this thesis that a single game will potentially never work in Web3 gaming, because if you look at the incentive, right, there's an issue. It's the reason why major gaming tournaments can never really go mainstream, because a large population of people can't win lots of money. That's a problem that most single title games have. There's always sort of the Michael Jordans of that particular game that are always going to capture majority of the earnings. This is why a multi-hit studio approach is the best solution for scaling a play-to-earn system, right? Because with BIGA Arcade, for instance, we have hundreds of different games, and each of those games has a different skill set. So you can't just dominate all of the earnings. We can make hundreds, thousands of people winners. And if you can make thousands of people winners, it gives hundreds of thousands or millions of people hope. But if there's only 4 winners, no one's really buying it, right? Because I have to spend money to go up against Michael Jordan. I'm just going to lose that money. There's no real point doing that. Right. So that's really important, that you can cater to lots of different audiences if you want to scale a play-to-earn model where there's a constant stream of revenues coming into a single system.
Yeah, it's amazing. I mean, you're basically, instead of catering to one crowd, you're catering to the world. I mean, anybody that wants to play a game, there's going to be something on there for them. That's absolutely amazing. I love it.
So I don't. Obviously, we're still seeing the beta version in that. Would you eventually have certain genres like memory games, card games, board games? Because I remember playing a game called Lumosity, right? It ended up being sued for millions, but it became a multi-million-dollar company where everything I did on there was to improve my mental focus, my dexterity, my retention, memory retention, all of that. But what it ended up doing is they gave me a score against someone else in my age group, in my class. And that in itself was addictive because I wanted to be the top 5%. I wanted to be that guy that could do that. So it ended up playing over and over. But at the same time, the benefit is that I'm actually improving my memory, or actually improving my mental dexterity. So maybe there's an opportunity to bring out those mental games where I'm actually making money, but I'm improving my brain, and all on the shitter.
Yes.
Not a multitask.
Yeah, absolutely.
So trifecta.
So the answer is yes. We've already built some, and they are lining that. And we've already built our backend analytic engine. So it's going to have all that. And once we need a UX genius who can compile the data in attractive ways and do so in a way that doesn't crash our system. Because every time we pull a lot of data, it messes with the front end system. So we're still working on the kinks there. But yes, we are doing exactly that, where you can see properly, not just see how well you're growing personally and cognitively through some of these games, but also how well you perform as from an earning perspective against everyone else. So that analytical engine will give you a nice illustrative outlook of all of that. And yeah, completely with you. And on the shitter too, we've built for mobile as well. So we've covered all bases.
My next question. Yes.
Excellent. When is mobile? Are you going to have mobile out right at launch, or is that going to be a little later?
Yeah, we've already built it in, and there's already three games, sorry, that are live on it. We've just been testing. But okay. Yes, stages, we'll drop it. Like, the thing about us is, here's another thing, is that, we've been building for years, and I'm in a privileged position because I have my own fund. I had a bit of capital that I could spend myself. So I didn't rely on financiers. I built everything from scratch and just paid for it all. So we're literally like 24 months ahead of our roadmap. We have so much to drop. That's why we have another 30 games ready to deploy. We've got mobile ready to deploy. We've got staking already done. Everything's already built. But it's how well so it's now a matter of how we dispense it all, right? Like, every single game is like a brand new token sync, but it also needs education and needs attention. So there'll be like KOLs and game content creators and everything, and sort of educational material with every game. So if you consider, like, if you look at some of the big games, like, I don't know, Infinity Gods and those that are considered big games, they're just one game we have on our system. So they do this big launch for that one game, but we've built lots of games just like it, and it's just only one of like 100 that are coming. So we have to do the same sort of launch sequence to make sure it's effectively digested by our audience and people understand how it works and people hear about it for every single game and every single milestone. So we've got so much, it's just a matter of, as you said, executing it in a way that's productive, right? Because if we just drop it all, everyone's just going to sort of miss how amazing each thing is. And they won't understand how the earning mechanics work. Because like I said, there's different derivatives of mechanics for how each of the games work relative to how you earn, relative to how that particular game works. So we're testing some awesome models, by the way, in regards to that. So the baseline model is you capture a level, you own that level, you earn the USDT, right? So this relies on other people's skill entirely. Is there someone out there that's going to beat my skill fast? Because it's a matter of, you want to hold the level for as long as possible, because the longer you hold it, the more USDT you're going to earn, right? So you're kind of at the whim of the world. So we've got other models where you can capture the level, beat the big boss to get that level, and then you become the big boss. So you defend your level. So now it's your skill versus other skill. And that's when our multiplayer stuff comes out. So you imagine the games that come with that, and dropping our multiplayer feature, having concurrent players. So we've just got so much to drop over the next 12 months. And it's doing so in a fashion that each of these milestones isn't lost in the noise. It's effectively digested. People understand it, can play it, but also getting it all in, because I know everyone's in a rush to like exploit this next 12 months because the big bad macro bear's coming and it's all going to go to shit, Right. So you got to cater to everyone's paranoia and anxiety.
It makes sense, but what you're building just seems so, and I hate when people say it's bear market proof, but you guys are building something sustainable that isn't necessarily tied to a bull or bear market or token price. You're building something sustainable based on the US dollar. I think that's freaking amazing.
Thank you. Okay, this is another controversial thing. So it's already controversial to say your token's guaranteed to go up 333x. People are going to call me a scammer.
Right, exactly.
It's also
we're going to hear all kinds of things about that.
Man, people are going to intellectually dunk on me all over Twitter. This guy's missed this sequence. Whatever, bring it. I'm so ready for it. Like, I've gone for it over and over again. If you can break my model, awesome. Try. I challenge everyone, because I really want to see it. We've had some really, really smart people come in and try to break it, and they sit back going, holy shit, that's really cool. In fact, I'm going to say that every Web3 game should just copy our token model. I'm happy to do that, because it's kind of like, yes, we're in a competition for a limited amount of liquidity. We all want to capture this audience, but it's like a rising tide lifts all boats. I believe not only crypto long term, but I think Web3 gaming is going to be the best if it's sustainable. It is the best retail funnel for crypto. We're talking 3 billion gamers that will by default capture crypto and then be like, what do I do with this crypto? And it's such an easy segue from having crypto, don't leave the system, come into DeFi, earn some yield or something else, or buy into these other tokens, right? And I think this is what sets Web3 gaming up for potentially being if you consider a retail gateway, it's going to be like the best acquisition asset segment in all of crypto. All exchanges, all banks that are going to be buying into the ecosystem, all are going to want that audience. If you are the retail funnel, you just set. So I think the acquisition potential in Web3 gaming is huge. Now, where were we? Controversy. All right, yes. Okay, this fucking default, sorry, excuse my French, but this default like shitty benchmark we have in crypto where all crypto projects eventually fail has got to stop. And I'm so sick of it. Like, if you look at chaos, they all talk about this, or not just chaos, but anyone who sort of talks about crypto is like, this project's going to be awesome. But there's always that caveat, but after it's done its 10x, I'm not responsible for the outcome. It'll die eventually. Yeah. And that's just like, everyone's cool with it. And it's insane. It's like, no. Someone has to build sustainable models. This stuff's meant to last. We're not meant to just have a quick pump and then it all dies. So I've thought about this over and over, and this is part of why I've just committed to product market fit, because a sustainable revenue system is key, right? And that's what we've built. I believe BIGA, we hit that 333x or even halfway or a fraction of the way, we will become a flight to safety asset because our token is programmed to shrink in supply. No matter what, it's going to keep going down. And we all know that people are going to play games during bear markets, no matter what. And we all know that auxiliary earning opportunities are in high demand during downturns. As people get taken out of their jobs, they look for alternative means to capture some kind of income. So if we really have nailed this sustainable, then yes, not only will we survive and thrive during a bear market because we've insulated our product through that price peg and through that liquidity, I don't know what you call it, prison. We've kind of captured it all and it doesn't leave. That alone will get us there. But the actual mechanics itself and the way the token operates, we technically, no matter what, should just cruise on up that 333x. We should, no matter what. I'm not saying there's not going to be downturns, but I expect BIGA to operate more like the SPX during a bear market, 20 to 30% downturn while the rest of the market just crashes.
Right.
Plummets.
And it's because we've committed to this sustainable model.
That's a hell of a model.
Guys, are you loving the content like we are, please hit that like and subscribe button and do me a little favor, right? Go onto Twitter right now and just at Elio Trades and at Alex Becker. I said, why aren't you using Paul Mack's model? Just do that. Let's spam them because those guys are big into their games. But yes, their token price has gone to the roof and gone to the shitter, and it doesn't seem to be sustainable. But I know Elio's got some cool things coming. But yeah, perhaps they just needs to widen his understanding of tokenomics. So yeah, he must get in touch with you, definitely.
Yeah, I'd love to, actually. I'd love those platforms. I'll speak to all of them. And like I said, I'm happy for other projects to copy our platform because sort of a rising tide lifts all boats. If we're all killing it, then Web3 gaming is just going to become this dominant segment. And I think it has the real potential to do so. And I think if these other projects, they can copy us. I don't care. Give us the credit, cool. But
just
after
10 cents.
Yeah.
You can copy just after 10 cents. Then it's
fine. Look, we have certain mechanical defensive moats that people just can't copy. For instance, we designed all our games from scratch and they work specifically with these models. The level ownership structure, the way that revenue model works with the token deflationary model, you can't really model that exactly, but you can apply the simple design of how the token is your network currency and it should get burned every time it goes into your system. If it gets burned every time it goes into your system, your sole goal is to just pump more people through your system, right? And it burns. That's going to create a deflationary impact on your tokens. That deflationary impact is something to just yell about from the ceilings because people now know, okay, no matter what, this token's going to shrink over time. So then it comes down to getting your game right. But that's where we have another advantage, right? Another defensive moat. We're a multi-game studio. We cater to a large audience. We've already built them all. That's already tied in. So we've probably got a good 12, 18-month head start on everyone else minimum. Plus, to be able to compete with us really for the top spot, they'd have to have our exact model with the level ownership gaming and stuff, which they're probably not going to have, plus the testing we've done and everything since. So we do have a very strong defensive moat no matter what. But if they apply the system, then they're going to do just much, much better. And they can just plug this into what they're already doing, or just jump on our system and let's party together, you know? Yeah. That's the other thing is we've designed our system. We can take big, the way we've used BIGA, like we could have just plugged in USDT, but it doesn't make any sense because it means we're sort of a captive slave to USDT or any specific stablecoin provider. It means we have one single attack vector where anyone can just shut us down. But the way we design it with BIGA token is, and our cashier is that if we want, we can program in different currencies. So if your token specifically, you want that to be the currency, similar to AVAX, right? We can make your token the actual currency and we just earn a percentage of your token. We would be, sell pressure could be converting that token from our profits into our own USDT display to build our liquidity, but it still acts as a faster token sync on your token while giving your token utility. It's now a straight up currency. So we kind of like this perfect solution for all these other projects. And yeah, I'd love to chat with all of them, you know, Pixels, Noob, Animoca Brands. Let's put your whole portfolio on this, you know, we'll fix all their tokens.
That's absolutely endless, man. You're creating something absolutely incredible there that I think a lot of people are going to want to copy, or maybe they'll just join forces with you. So
yeah, man, that's just also
super cool.
Paul, I'm going to put you on the spot, and this is you got to understand, crypto people are very resourceful people, right? So you've built these beautiful games, and it has crossed my mind, or let's say it has crossed a friend's mind. Let's not use me in this, right? And using ChatGPT and analytics models and trying to crack the game so it can actually scan the game that's playing and give you the algorithm to get those levels higher. Have you got an anti-scam system that will protect from bad actors?
Yeah, absolutely. So it's really just like layers of contingencies, right? So we have the main underlying advantage we have over all other projects is, again, each level has its own liquidity pool, so to speak, and each game has its own revenue system. So for instance, if you're a single title, there's pretty much one attack vector. They break that one single game and your whole system falls apart. With us, you'd have to attack all of our games to make it like financially viable to go on this, to spend the amount of money and resources to take to sort of hack us and capture all these levels. You'd have to do so simultaneously across them all without triggering any anomalies. So we have, oh, Jesus. Okay, I don't want to say it directly because I can't articulate it as well as my lead game engineer, so I'm not going to try to look smart. If he was here, he could do it. But we essentially have layers of contingency. Our first layer of defense is the fact that we're distributed completely, not just games, skill sets, mechanics, revenue, all of it's distributed because we've got all these different games. Second is that we've protected, so we have vaults on certain anomalies. So if something anomalaic, if that's a real word, where it happens, then it's straight away flagged. For instance, if you deposit funds and then you quickly capture money and then you try to withdraw, you're pinged straight away and you can't withdraw. Okay. And it just has, you're in a holding process, and then it's either spot checked by our program that we're running to see if there was some error, or it's manually checked if it doesn't pass that. So that's contingencies on contingencies on contingencies. So yes, we have that. Plus we're also running AI models to try to beat our games as well. But again, this is always like with every game. If you look at the big publications, they all have the same issue of dealing with hackers. But it's really just a cat and mouse game, right? We keep running systems to see how they can try break it. If they can break it, we've patched that, and it goes down and down. So to be able to do that with our system, because it's completely distributed, because all the pools are distributed, we are the hardest system in Web3 gaming to crack. And so far, we haven't had any issues. The only issue we have had, someone managed to hack our front-end interface level. So they changed the score on our leaderboard. So they didn't actually win it in the game. They actually changed the score, the way it reads, which is weird.
Okay.
Yeah, that was the only one.
Were they able to achieve anything with that, or no?
No, that was obviously flagged.
That's
I
interesting.
apologize in advance. It might have been me. No, I'm joking.
Oh, that's excellent.
So yeah, we've got security down as well, to be honest. And I think hacking's a major problem for single title games.
Yeah.
I feel bad for them, and I've spoken to some of the top teams as well about how they're handling that. And it's dicey. Like it happens with I still play Counter-Strike, right? And people are already complaining about it in Off the Grid even, and it's so new. But it happens in Counter-Strike. I don't play a single server where someone's not walling or something. It drives me nuts. It makes me not want to play anymore sometimes. But what happens when you layer in real financial incentives? The incentive to break the system goes exponentially higher.
Right.
So yeah, big issue. With us, not so much at all, from just because we're distributed. But then our layers of contingencies all work. And yeah, there's a bit of UX frustration if you're a legit operator. But I think legit operators don't care about a standout period to withdraw if they're legit. The only people that will complain are people that are actually cheating the system, right?
Yeah.
Right. Wow. So you've given us a lot to digest here. I think our audience is going to be clamoring for more information, I think, too. But before we wrap everything up, can you give our audience maybe some advice on someone who's new to Web3 gaming or even your platform specifically? What advice can you give them just on how to take advantage of Web3 in general?
Honestly, guys, the thing we have to understand is that there's product market fit and capital market fit. So I can say, here's a fundamental recipe you should adhere to, but there are exceptions on the capital market fit side. So most projects are in the space to raise money. And most projects' main way to make money is to sell their tokens. Essentially dump them on you. That's the whole objective, is to convince you to buy their tokens or add enough liquidity to the pool so they can dump their tokens. So whether it's capital market fit or product market fit, those are both the issues. If you have real product market fit, then that isn't the incentive, right? The incentive is to generate fees and have a long-standing business. So that's why if you're in the, like, meme coins aside, if you're not worried about speculating, go have fun, that's fine. That's capital market fit. People are designing systems purely to raise lots of money and speculate on money. That's fine. But if you're after product market fit, it's really, really simple. The first question you should ask is, okay, how do you generate revenue? Because if they can't answer that, then you should just be out the door, because it means if they don't have revenues, it means why? It means they don't have customers. If they don't have customers, why not? It's because they haven't built a product anyone wants. If they don't have a product anyone wants, they don't have a business. If they don't have a business, why do they have a token? Right? That's really simple logic. And second, the token itself, right? Tokens' primary design is to somehow capture whatever value the protocol creates and distribute it to its holders. So again, if there's no revenue, there's no value. It's not capturing anything. Now, tokens can generate revenue indirectly. So directly would be like revenue shares, right? So I'm getting revenue from the system and they're sending it to me. Or indirectly through like a token burn. You hold the token, it becomes more and more scarce while demand either stays level or increases, right? So by that way, your token's going to go up in value. Those are the only ways. So again, it comes down to how are they generating that? So it's, are you generating revenue? How is that happening? And how is that revenue or value transferred to token holders? And the other thing is, always ask, where's the yield coming from? Because yield is one of these things they throw out there to say that this is why you should hold the token as well. But yield is like generally created by the issuance of other tokens. So it's like a self-decaying model. You shouldn't be involved in that. So where's the revenue coming from? Where's the yield coming from? I think if you just abide by that, then product market fit becomes very easy to identify, or genuine builders with good intentions.
Yeah. Oh, that's amazing advice. I hope all you out there are going to take that to heart, because you don't hear that very often. Just that level of detail that you've just given. And I think that's going to be very, very helpful to a lot of people out there.
All right, guys, if you want to find out more and get a head start on the beta side of things, so you can get when they do launch and basically you know how to play these games, go to bigarcade.org. You get some free tokens to go and play and have some fun. Once you've played, come share some comments in how you enjoyed it, what's your favorite game, and some comments. So you like it or you don't like it, we're here to chat. And then one last thing, Paul, before we leave, is there any TGE date or just more or less?
Yeah. Okay, so we were trying to go for the first week of December, but it's a matter of arranging all the parties to all agree and align them, the launch pads and the like PR and the KOLs. Unfortunately, that hasn't happened. And if we go too late, then we get stuck in the noise of Christmas. So it's going to have to be January.
Okay.
But yeah, we're 100% going for January, and we've confirmed with all of them that January works. It's just the exact date. It should probably be around the second week.
Excellent. Well, hey, we're all chomping at the bit, but at least everybody has a little expectation of where to find
and
you
I
at there.
think that is the cue there, Paul. Your children are screaming for you.
You hear that?
Yeah, we hear that. That's just a normal day in
Dad's Gone
Crypto.
Crypto. We're used to having kids screaming in the background. It's
Your
fantastic.
army is calling you.
Yeah, amen. Dad's got to go back
Paul,
to work.
thank you. Thank you very much for being on the show. We thoroughly enjoyed it and looking forward to sharing it with our community, and wish you all the success for your project for the future.
Hey, it was a real pleasure, guys. And hey, let's chat just on private as well. It's really good to meet you guys, get into it.
Absolutely.
Awesome.
Thanks a lot, Paul.
Thanks, Paul.
Take care,
Ciao.
guys.
See you guys.
The material and information presented in this recording are for entertainment purposes only. Do not misconstrue what you hear as investment or trading advice. Always do your own research. The views, thoughts, and opinions expressed by the guests on this recording are their own and do not necessarily reflect those of Dad's Gone Crypto or its hosts.